Welcome back, my friends. If you follow stocks, you probably know that shares of Tesla have been falling pretty much all year. And shares of Tesla fell 8% on Tuesday alone. Now, Tesla stock is sitting at a new 52-week low. And where has Tesla CEO Elon Musk placed the blame? Well, if you follow this channel, you already know who he blamed. He blamed the usual whipping boy, deteriorating macroeconomic conditions. If you recall from the many disappointing earnings calls, you probably remember that basically every CEO has placed the blame there. CEO Elon Musk tried to blame macroeconomic factors. Many observers think that Musk's acquisition of Twitter has distracted him. Tesla stock has underperformed as compared to other automakers in the benchmark S&P 500 index. Meanwhile, Tesla has been taking aggressive actions to improve sales and operations, offering discounts and incentives to improve sales in China, working to improve efficiency in new factories in Texas and Germany, resolving the many supply chain issues, and coping with soaring energy prices in Europe. If you recall, in Q3, Tesla delivered 365,000 vehicles. That compares to 258,850 vehicle deliveries in Q2 of last year. That was an improvement, but somewhat disappointing to Wall Street analysts. So, what does this mean for Tesla? What does it mean for the economy? And, what does it mean about the future of the United States? But, before we get into all of that, please press the like button and leave a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Shares in electric vehicle leader Tesla reached a new 52-week low this week. Shares in Tesla closed around $138 per share on Tuesday. CEO Elon Musk is blaming the usual whipping boy, deteriorating macroeconomic factors. Tesla stock price now reflects the value of having no CEO. Great job, Tesla bod. Time for a shakeup, said longtime Tesla bull Ross Gerber. Gerber has launched an informal campaign to have Tesla shareholders appoint him to Tesla's board of directors. As bank savings account interest rates, which are guaranteed, start to approach stock market returns, which are not guaranteed, people will increasingly move their money out of stocks into cash, thus causing stocks to drop, said Elon Musk in a tweet. But Tesla's stock has fallen more than other larger automakers. Stocks are down precipitously since Musk announced his plans to buy Twitter in April. Tesla shares are down 59%. Shares of Ford are down 26%. General Motors stock is down 12%. And the benchmark S&P 500 is down 14%. The Tesla chief has a lot of distractions, Gerber continued. Elon Musk has been stirring controversy as the new owner and CEO of Twitter, Gerber also said. If you recall, Elon Musk purchased Twitter in a leveraged buyout in October. Don't forget, Elon Musk is also the CEO of SpaceX, which is a major defense contractor. Musk sold $3.6 billion of his Tesla holdings to finance the Twitter deal. According to Musk, he sold Tesla shares to save Twitter. If you follow this channel, you already know that Musk cut more than half of Twitter employees. He also made a bunch of product and policy changes. Then, some of them were later reversed. While Musk has been focused on his new role as chief twit since late October. Those, among other challenges, led Mizuho Securities and Evercore ISI to reduce their Tesla price targets on Tuesday. Near term, we see potential weakness in Tesla sales as macro headwinds and a weaker consumer could drive lower demand for higher-priced EVs, said a Mizuho Securities analyst in a note to clients. We are still bullish Tesla long-term because of the company's new factories as a competitive advantage, the analyst continued. And new electric vehicle tax credits on the horizon in the US which could accelerate demand domestically, the Mizuho analyst also noted. In China, electric vehicle credits expire in January. Mizuho has a price target of $285 and a buy rating on shares of Tesla. Only some of the drop in Tesla's value can be blamed on interest rates, said Vanderbilt University professor Joshua White. Twitter overhang is one important component. China is another huge component, White added. We still don't know if China will be open all the way, and we see there is supply and demand pressure here in light of the increase in COVID cases and disruptions, White also said. Elon Musk may have lost shareholders' trust when he said in April that he didn't plan to sell more of his Tesla shares, but went ahead and sold billions of dollars more, White also noted. He seems to sell equity in really large blocks, and say, "I'm done and I'm not selling anymore." But talk is cheap. He says that and then sells more shares, said White. So the more you say that and investors think he's probably not done, the less confident they will be that the price is going to bounce back, White said. "I won't even entertain the idea that my behavior impacts the stock price," responded Musk in a tweet. "Maybe so, in which case, buying opportunity." Musk replied on Twitter. "I keep saying that Fed rate is insane, because data I'm seeing says we're already in deflation. If true, then real rate of return of T-bills is roughly that of S&P 500. Very smart investor I spoke to today said he's shorting S&P." Continued Musk. "If you follow this channel, you already know that I have likened the economy to a souffle. The top is starting to collapse down onto the bottom. That the bottom is solid and getting denser as the top collapses onto it. And by top, I mean luxury goods and consumer discretionary items. That includes luxury homes. It also includes furnishings for luxury homes. Remember my video about RH last week and how the RH CEO gave Wall Street analysts gloomy guidance? That is because RH sells luxury goods and caters to high-income earners. And many of those people are high-paid tech employees. Probably, many of those people had a large share of their money in speculative investments. Shares of unprofitable tech unicorns. And probably cryptocurrency investments. My friends, a Tesla is a luxury item. So, it does not surprise me one little bit that Tesla executives are starting to feel the pain of the deflating souffle. Of course, Tesla cars have positive environmental value. So, you might say that buying a Tesla has more meaning than just as a luxury item. Many people consider it a price that everyone in society will eventually have to pay to face climate change. But as things stand right now, a Tesla is right there with a luxury home at the top of the deflating souffle. Deliveries of vehicles represent sales data for Tesla. Although Q3 deliveries of 365,000 was impressive and a record for Tesla, it still fell a little short of Wall Street analysts' expectations. Tesla noted that they delivered 19,935 of the higher-priced Model S and X models. So 345,988 of the vehicles delivered during Q3 were its more popular Model 3 and Model Y. Total vehicle deliveries were up substantially from the prior quarter of 2022. Tesla said it made 258,580 vehicles in Q2 of this year. That Q2 number is up just slightly from Q3 vehicle deliveries of 254,695 vehicles in 2021. But, this year, Tesla is operating double the number of factories as compared to 2021. In 2021, Tesla had only the Fremont, California factory and the Shanghai, China factory operating. Now, Tesla has the Giga Berlin factory and the Giga Austin factories up and running. Although the new factories are not really up to full-scale production yet. And, the Shanghai Gigafactory has been beset by COVID lockdowns that have hobbled the Chinese economy. Production of the more expensive Model S and Model X vehicles is up by more than 100% as compared to Q3 of 2021. Last year, Tesla delivered only 8,491 of its S and X models during Q3. The Model S and the Model X are the more expensive stylish sedan and the SUV with Falcon wing doors. Tesla has had to deal with skyrocketing commodity prices during 2022. There has also been a good deal of employee turnover. Artificial intelligence team leader AI leader Andrej Karpathy left the company in July. There have also been some severe growing pains at Giga Berlin and Giga Austin. Tesla does not typically give out regional delivery data. So, we do not really know which factory manufactured what number of cars. Tesla also shut down the Giga Shanghai factory this summer in order to make some extensive upgrades. But, full-scale production at the Giga Shanghai factory had rebounded during August. In keeping with the rest of the big tech companies, Tesla laid off an entire AI office at the end of Q2. Other undisclosed layoffs were also made. Tesla has announced that it is enforcing a full return to office policy for all of its employees. CEO Elon Musk is requiring that all Tesla employees work at a Tesla office at least 40 hours every week. This applies to all employees, even those who previously worked from home. Certain employees were fired and others chose to resign following the announcement. Informal and anecdotal reports are saying that Tesla offices were crowded and uncomfortable during Q3. So, employees are suggesting that it was difficult to get any work done at some of the Tesla offices. The Fremont, California facility was particularly impacted, as was the Giga Nevada factory. That September brought celebrations and employee recognitions as executives lauded the hard work of employees in making the vehicle deliveries. August was a record month for the Fremont factory in terms of production, said one Tesla executive. The Giga Austin factory reached an important milestone of 1,000 cars per week production rate. But Tesla still faces headwinds from many directions. One particular challenge is skyrocketing commodity prices. But, what do you think? Please leave a comment below and press the like button. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.